inheritance tax planning. What should you be doing now? Hi, I'm Kimberly Chapcott, qualified chartered accountant, property investor and entrepreneur. Let's sit down and have a chat. We've seen some slight changes to our inheritance tax, so let's dive into some numbers today and have a look at what the impact is going to be, depending what you have within your estate. That way you can see exactly how the numbers are going to work and what is going to happen, so that you can start putting some plans in place for your estate and how inheritance is going to affect your estate and what your family is left behind when you are no longer around. Let's see what the numbers show. Let's have a look at our example. So let's start with a look at what we have in our estate. So we're going to have our personal property of 500,000 in our estate. We have got some investment properties which we are going to put in at 830k because we've got maybe 5 properties in that portfolio. We've got mortgages on those properties and our mortgages total 498k for our example today. And then the other item that we've got is a trading business, which is valued at 2.5 million. So overall, for this couple, we have got an asset base or an estate valued at 3.332 million. So on that basis, we are definitely going to be covered by inheritance tax, which means we need to be having a look at how this is going to fit together and in terms of what tax may or may not be payable. So let's start with our partner number 1. And we'll also bring in our partner number 2. So this could be Mrs. Bloggs and Mr. Bloggs, or it could be Mrs. Bloggs and Mrs. Bloggs, or Mr. Bloggs and Mr. Bloggs. I'll let you decide. But our first partner is going to have 50% of our personal property, so they own this 50-50. Now, our investment properties, again, we are going to look at them owning them 50-50. So we've got 415k each for the value of the properties, and our mortgages are sitting at 249k for each of them. Now, our final bit is our trading business, which our partner 1 is going to have 40% ownership of, which means that they've got $1 million. And the other partner has got 60%, so they are at $1.5 million. So overall, for each of these persons' estates, our partner 1 has 1,416,000 and partner 2 has 1,916,000 in their estate. So as you can see, we are likely to be over our inheritance tax thresholds, which, just to summarise, our thresholds are, so our allowance is 325,000 and our nil rate band for our personal property is up to 175,000. So the first things we need to look at now is if there is anything that we can take out of our estate because we've got any reliefs available for. So at this point in time, we can safely say that yes, we have what's called BPR, or our business property relief. Now this brings into effect something that has very specifically changed. Now, since the budget in October 2024, our business property relief is restricted to 1 million per person, which is non-transferable. So this means at the point in time that something happens to partner 1 or partner 2, we need to make use of that allowance. And if we don't make use of that allowance, then it will be lost. And this could have quite big implications for inheritance tax, because if we don't use that million, there's potentially up to 400,000 of inheritance tax that will be payable if it's not used correctly. So it is quite an important one to make use of. Now, the big question here is what has changed? And what has changed is historically, anything with a trading business would be fully allowable and there was no limit. So for partner 2, where we've got 1.5 million, historically that would have been fully allowable for inheritance tax purposes and there would be full business property relief. However, now that is not the case. And now we are only able to take off 1 million for each partner, which now means that in terms of our estate, we've got 416,000 and 916,000 that we can now see whether we've got any other allowances available to make use of. So the next one we can have a look at to see whether we can use is the nil rate band. And this is basically where you can use the lower of the property value and the 175,000. So because our property value is in at 250,000 for each of the individuals, that means that we can take off our 175 in full. If the property was not valued at 175 and maybe it was 125,000, we'd only be able to take the 125 off, and it would be the lower of those two figures. So in our example today, we can take off the 175, and this now takes us down to 241,000 for partner 1, and it takes us down to 741,000 for partner 2. So this now means we can look at our inheritance tax allowance. And our inheritance tax allowance is 325,000. However, as we can probably see for partner 1, she doesn't need, or he doesn't need, the 325,000. He only needs 241,000. So this partner has 0 figure for inheritance tax and no IHT to pay. Now, the caveat on this is that 1 million is not passed to their spouse. That 1 million for the value of the trading business is actually passed down to maybe the next generation, or a business partner or friend, or whoever that is going to, but it is not passed to the spouse. If it is passed to the spouse, then that will mean that the allowances are not used, and in not using the allowances, we've wasted that 1 million business property relief, and whoever receives it, or the spouse receives it, that will go into their estate at that value. And unfortunately, rather than having 1.5 million in their estate, they'll have 2.5 million, and only 1 million will be allowable for the business property relief, even though the other person hasn't made use of it. So it is quite a significant thing to make sure that anyone's will is properly drafted to ensure that this business property relief is being used appropriately as necessary. So let's move over to partner 2, and partner 2 can use their full allowance of 325, which therefore means that they have now got an estate of 416,000, which will be taxed at 40%, and that will be taxed of 166,400. Now, historically, this 1 million would have been 1.5, which would actually have given us the same result as partner 1, that there would have been no inheritance tax. So for anyone passing on trading businesses where they are over the million, there will be an impact. Obviously, we have got the investment properties which are having an impact because they may have had inheritance tax on them if the value of that is higher. So as you can see, there has been some changes with the new tax rules, because historically we would have had our 1,916,000, we would have taken off our 1.5, we would have then had a sum total of 416 again, taken off our 175, that would give us 241, which is less than 325. which would have given us a sum total of 0. So there has been an increase due to the recent changes for this person, and anyone in this position probably needs to have a look at how things fit together to see if there's any changes they want to be doing in the meantime to try and minimize their inheritance tax position. Hopefully this has given you an idea of how to potentially look at some of the inheritance tax side of things, and please do leave any comments if there's any questions on other scenarios you would like to be seeing, so that we can give you a good picture of how things are calculated. Ultimately, the best thing for inheritance tax at an initial point, anyone in their 30s, 40s, 50s, is probably to be aware of what the inheritance tax implications may be on your estate as it's developing, as it's growing. As you head into the latter years of your life, it's at that point that you really possibly want to be doing some active planning to see how you can potentially minimize that sort of impact, especially if you would like to be leaving things to the next generation or to any other parties to maximize what is being left behind for them. Obviously, as this is all future planning, we are looking into that crystal ball, and in looking into a crystal ball, it is very difficult to see, especially with changing governments, changing tax legislation that may happen over the next 10, 20, 30, 40, 50 years even. So on that basis, there's no quick fixes to this, and it may take a bit of planning to work with an appropriate advisor to look at how things fit together. Obviously, the first thing is to be understanding and knowing what you do have that will be fitting into your estate and what value you are working with. It may be one of your targets to get to a certain estate value in your lifetime. Then the next question will be, how do you minimize the tax to get it to wherever you want to go? So hopefully this gives you an idea of how it fits together. And the next step for you, if you've not already, is probably making sure you put together a plan of what assets you have, what liabilities you have, to have a look at what is going to be the value of your estate. As you can see, it will depend what is in your estate, and that will be the main driver of how inheritance tax is dealt with. However, you can have a look at what you're doing now and keep track of this. And I would definitely suggest that you have some sort of summary, some sort of spreadsheet or it written down, which shows exactly what you've got, so you can just keep track of where you are from an inheritance tax point of view. You may be able to do lots of planning, you may not be able to do any planning. So you may just need to be aware of exactly what the burden is going to be on your family. So you can enjoy your life, but you know exactly how they're going to be paying that inheritance tax bill. Or it may be you're looking for ways to completely remove the inheritance tax liability. The first step is definitely knowing how much it's going to be, and then putting everything together so that you can see what you will and what you won't be getting. Obviously, unless you're planning on saying goodbye to the world tomorrow, things are likely to change. However, if you can manage it, keep on top of it, then hopefully it will minimise any tax that has to be paid on what has always generally been known as a voluntary tax if you structure things in the right way. Hopefully today you've got an idea of how you should be looking at some inheritance tax planning and the impact following the 2024 budget on your tax planning. If you have any questions, then please do leave a comment. Please like the video and do subscribe to the channel, and let's make tax less taxing.